Okay. Hello, everyone. I am Lisa Twilley. I'm the director of the Women's Business Center at Maryland Capital Enterprises. Thank you guys for joining us tonight. Um, we are a nonprofit based in Salisbury, also have an office in Baltimore. We serve all the Eastern Shore of Maryland, Baltimore City, Baltimore County, and Anne Arundel County. So we help people get started in business, or if you're already in business and trying to expand. We do training classes such as tonight. We do business consulting, marketing consulting. We also do small business loans. So if there's anything that we can help you with, I will put my information in the chat. Please reach out to me if you need any help. We help with business plans, cash flow projections, helping you get ready for a loan. So those kind of things we can help you with. So tonight we have Lindsay Peel, who is the owner of Kingdom Vision Consulting. She is also a speaker and she does lots of things. She's a realtor, so I'm going to let her tell you a little bit about herself. Thank you so much, Lindsay.
Thank you so much, Lisa, for always having me. It is a great privilege and an honor to collaborate with MCE to support the many entrepreneurs in you all's portfolio. Before I dig too deep into who I am, what I do, and why I am qualified to be here, I love being able to get to know my audience, especially when we are in very intimate spaces. So Ms. Postel and Mr. Dabney, we're going to put you on the spot a little bit for you to introduce yourselves. But if it's okay, Lisa, I'll pause the recording just in case so that they can share any personal information that they would like to resume with the recording so that we can make sure that we're capturing the content. As Lisa mentioned earlier, I do a number of things. Licensed realtor here in the state of Maryland. I am a former banker. I spent a number of years within the retail banking space, from a part-time teller to a branch manager of a few different locations here in Baltimore City over a number of years. And a couple of things that really hit home for me was that I saw a lot of people get declined for a lot of different types of credit products. It could be mortgages, it could be business loans, personal credit items. And I noticed that there was a need in the market for financial education at its core, but most importantly, education that people can actually feel, see, touch, and that actually meets them where they are. So a part of my journey over the last 5 years, we started our consulting practice, Kingdom Vision Consulting, where we're spending that intentional time with entrepreneurs, but also with organizations that serve entrepreneurs to make sure that you all have the financial education that you need. I've been featured in several spaces thanks to my collaboration with MCE. A couple of years ago, I was awarded as the Financial Services Champion of the Year on behalf of the Maryland SBA. So, this is my life's work. This is my life's blood, my ministry, as I like to call it. And one of the things that we're actually embarking on is creating, some really intentional curriculum around not just credit repair and how to restore your relationship, but also how to reverse the rejection. So, today's conversation is just the beginning. This is not going to be the end all be all, right? This is to whet your palate a bit, to start having you think about some things, to get you comfortable addressing some things, and then being able to start, diagnosing where those areas of opportunity that we need to make sure that we are focusing on. So let's talk about why this topic is even important, right? Why does credit matter? Anybody? And I know that we might be multitasking, but if you can, just type in the chat or come off mute. Why is credit important? Why do you feel like it matters?
For me, from what I understand, credit is important because whether it's banks or I guess you could say a mortgage company, they want to see how creditworthy you are. If you can pay your bills on time, if you what is it with your bills, do you have enough money to make sure that you can continue the payments and so forth? That's what I understand about it.
Yep, you're exactly right. All of that. All of that. Credit is one of those things that it get on our nerves a little bit because we don't always understand how it works and the small nuances, but it's one of those things that's so important, specifically here and where we are in the United States. Credit for a lot of people, credit is everything. Growing up, I heard a lot of, oh, cash is king, right? And while that can be true if you have a lot of it, what we've never heard was that credit is queen. And if anybody here is familiar with chess, on the chessboard, which of those two pieces are most important, the king or the queen?
The queen.
The queen, right? The queen. Yes, everybody's job is to protect that king, sure. However, that queen is the most versatile piece on that board. She
Mhm.
can go up, back, left, side to side, multiple spaces and places. And that's how I want you to think about your credit. Even if, right, you don't necessarily have a whole bunch of money coming into your business or into your home, I promise you, if you have a good credit score, guess what? You can go out there and go and get the money. Okay. When we think about credit, it touches so many areas of our life that we don't even realize, right? Of course, housing. Yes, of course, when it comes to purchasing a home and getting a mortgage. But even before that, when you are renting, your credit impacts that. A lot of landlords are doing credit checks, and a lot of them will say no if your credit profile is not up to par. Why? Because to lenders, to landlords, and to anyone else, to all types of merchants and vendors, your credit report is like your financial report card.
Mm.
It's not just a score, it is truly your financial reputation. Now, one of the things that I like to say often is that, unfortunately for us and consumers, your underwriters don't get a chance to dig deep into your life, right? They don't get a chance to see that, oh, your credit report dipped in 2020. They don't get to say, oh, they probably lost their job, or oh, they had to stop working to take care of a sick family member and FMLA didn't kick in early enough. They don't get to see that, oh, you went through that nasty divorce. So you got to think about it, right? From a surface level, your credit report is just the beginning of what people are going to think and see about you. While life happens, right? We say it all the time, life be life and out here, but we have to really try our very best to take care of our credit, even in those situations where it seems like there's a strain. A piece of advice that I give people, from time to time, when you have to make decisions on, do I pay this or do I pay that? You want to think about what's going to impact my credit. I'd rather you be late on the Wi-Fi bill than to be late on that credit card bill or on that car. Because when you're late with Wi-Fi, Xfinity is not going to say, hey, you're 30 days late, ding on your credit. They don't really start putting things on your credit until they become charged off accounts and now they're collections, right? When you think about Wi-Fi, when you think about the phone bill sometimes, right? When you think about all of those other things that we still have to pay that are a part of our responsibilities, they're just not on your credit report. Anything that's on your credit report, you want to make sure that you prioritize them, because as soon as they hit that 30-day late, that's when things can start going downhill from there. And there are other things that can impact your credit too, but just as we start this conversation, I want you to really start thinking about why taking care of your credit matters. We might not love the system, okay? But it is our duty and responsibility to learn at the very best how it works so that we can do our part, because it also impacts your rates. One thing about it, we might not love it, but when your credit score isn't at a certain level, you pay more for money. Your loans, your rates are much higher usually. You might have additional origination fees, other fees that might be built inside of the products, simply because on paper, you look like a risk. You can be as sweet as pie, the nicest person doing all the things, But when the lender looks at that report, they're trying to determine, can they lend to you and be confident that they're going to get their money back? It's not personal often, it's truly just business. But for my entrepreneurs who are here or budding entrepreneurs, your credit, your personal credit also impacts your ability to get business funding. Ms. Lisa and her team will tell you, okay, yes, you might have that business. Yes, you might have your EIN number and all the things that the social media gurus tell you to go and lock down, but your personal credit still matters. During the pandemic, we saw a lot of financial experts pop up out the woodworks. And they would tell you, start that business, get your LLC and your EIN and all the other things, and you can just go and get $250,000 in business credit without having personal credit. That's not accurate. While you can go and get some business credit, you don't want to operate with the assumption that your personal credit does not matter, because it does. And oftentimes, when you have a lot of lenders who don't look at your personal credit at all, you want to look at those rates. You want to look at those terms. I have a number of entrepreneurs who have unfair terms. Some of them are really kind of predatory when we really think about it and look at it, because they had to go and get it because their credit wasn't in the position to get traditional bank capital or CDFI capital, that capital that is trusted. So you want to think about it. Even from an insurance perspective, you don't have great credit, you have a possibility of having higher insurance rates. Even employment, you can be denied a job based on your credit profile. Let that sink in for a second. I remember having coworkers who I saw with my own eyes apply for promotions, were qualified, but were denied because of some debt that they had. Because companies feel like you're a risk. So it's important to know that when it comes to your credit, the score is important, but not just the score, it's the overall profile, because your reputation is everything. Because it's also possible to have a high score and you don't have a diversified credit profile. And we'll talk about what that diversity looks like. But I want you all to really think about, how can we rewrite your credit scoring? I don't personally care what happened in your past. Not that I don't care about you or the things, but what you didn't know or the mistakes you made or all of the things, it is okay. And I don't want you to be ashamed of it. I don't want you to be afraid of it. I want you to embrace it. I want you to address it so that we can start the process of rewriting your story. It just takes the first step. One of the biggest things that's important is understanding, right, your credit score. What makes up your credit profile? It's a number of things, right? And you want to understand their percentages, because, as you could probably assume, the higher the percentage, the more important it is when it comes to creating that overall score. I'll start from the bottom and work my way up. Credit mix. When it comes to your credit mix, you want to have a diverse credit profile. When we think about credit diversity, okay, that encompasses a number of different things, a number of different credit accounts. That's your revolving credit. When we think about revolving credit, that's your credit cards, that's your lines of credit, right? Those are revolving accounts. What does revolving mean? Revolving means that these are accounts that you open, and they usually stay open unless you close it or the creditor closes it because of a reason. And we never want the creditor closing accounts, okay? Just throw that out there. But these accounts remain open, and you use it, you pay it, and you get a chance to use it again over and over and over again, as long as you take care of it. But then you also have your installment accounts. Your installment loans are like your auto loans, your mortgages, your personal loans, your student loans. These loans, that installment debt, a couple of important things about them is that, one, you're usually going to have a set monthly payment every single month for those accounts. That's the beauty of it for a lender, is that, hey, if I give you this $10,000 for 3 years, that 36-month term, they're going to take that principal amount and the interest amount divided up by 36. That's going to be your payment for the duration of that term. Sometimes, right, installment loans can sometimes in some cases be a little easier to acquire as you're rebuilding, because for a lender, they know that they're giving you a set amount for a set amount of time, and you're going to pay a set amount and it's going to be done. When you think about credit cards, let's think about a real credit card that you might have in your life right now. Let's just say, worst case scenario, you max that credit card out. On that statement, they give you a minimum amount every month that you must pay. In real life, you could pay that minimum every single month. And you can just keep doing that, and you might spend a little and pay that minimum, and the bank will never fully get paid for the money that you spent. So that's why, and we'll learn about this a little later when it comes to your utilization of those revolving accounts, is so important, because the bank want to make sure that they can get their funds, but also they want to make sure we're not over leveraging. You want to make sure that you have a diverse mix on your report. You want to try to have at least 3 different types of credit on your profile to really give you some diversity. You want that revolving account, okay, or multiple. I like to say you want to have a good 2 or 3 of those revolving accounts, okay? You want to have some installment accounts. And if you can, you want to have different types of installments too. That shows credit diversity, because for lenders, they look at short-term accounts as well as long-term accounts. Your mortgage is more of a long-term account. Usually your traditional mortgage is like 30 years. But then you might have a short-term installment. You might get a personal loan that might be 12 months or 24 months. They want to see that you can manage different types of credit accounts in different seasons of your life. That's important. They're also looking at your new credit. How often are you applying for credit? Okay. How many inquiries do we have? How often are we incurring these hard inquiries because we're applying for credit? You really want to try to keep your inquiry count. In my professional opinion, you want to keep that under 7, right? Within a 24-month time period, but really preferably 5 or less, okay? Because a couple of things. When you are applying for credit and you have that hard inquiry to show up, first and foremost, it's going to sit there as a hard inquiry for 24 months. It usually falls off on that 25th month. But secondly, that shows a lender, right, whether or not we have been in a space that we have needed capital or not. When they see way too many inquiries, it looked like we've just been shopping and maybe out of desperation, and we've needed this money. You don't want to look desperate on paper. You don't want them to see that you're coming to MCE to apply for your business loan, but within the last 6 months, you've applied to 5 other business lenders as well. You want to be very mindful and very, very careful. You want to be intentional about when you apply for credit and how many times you run your credit. I'm one of those people where I'm constantly looking at when are my hard inquiries falling off so that I can time when I want to apply for capital for a specific thing. New credit is important. It might seem like it's only 10%. That might not seem too big, but really any of the 5 components in here you want to think about. The length of your credit history. We don't talk about that enough. How long have you had credit? Usually what will happen is on your credit report, when you're looking at it, once you download Experian, right? They're going to show you an average amount of time that you've had credit. They're usually looking at the amount of time as average from your first account to your last account. They come up with an average of how old your credit history is, and you're judged on that. I know a lot of times some of us might have grew up and we heard, don't trust credit, don't go and get it. But the reality is that we need it. You got to have it. So you want to establish your credit history. You want to have a couple of accounts and you want to hold on to them. Again, those credit cards, those revolving accounts, you don't want to close them. Even if you're like, Lindsay, I don't need to be spending it. Okay, freeze the card, put it in your freezer, that old trick. Or you can cut it up. The account can still be open, but you cut it up. Or just put it in a safe. But you don't want to close them, because when you close them, let's just say your old account, now you're offsetting that history. A lot of times, right? I have people who run into cases where they've paid off student loans, and it's like, Lindsay, you would think this would be an amazing thing, which it is. We don't want to take that away. But for a lot of people, their student loans are sometimes the oldest account that they've had. And when those older things are then removed, they're paid off, the average time is adjusted. And sometimes you'll see points drop from you paying off credit items. Something that you want to sell, your children or your grandchildren, nieces and nephews, or whomever in your life, you want to try to make sure that they can get a credit card even before they start getting student loans. Because again, got to remember those differences, right? That credit card is revolving. As long as you take care of it, it'll stay open. You can have a credit card for 20, 30, 40 years, right? As long as you take care of it. Those student loans, that jumps into the installment section of your credit type. Installment loans, again, they have what? They have a payoff period. That set term and that time and that dollar amount, and it's done. Once it's done, it's done. So you want to make sure that there is an older account beyond that installment loan that will hopefully be paid off one day. That's a hack, and I hope you all are taking notes, okay? Credit utilization. This is ultra important because it makes a big difference in your credit profile. I have seen folks who've never had a late payment, but credit scores are still under construction simply because their credit utilization is too high. Has anybody ever heard of the 30% rule? You want to try to keep your revolving credit at or under 30%, right? Really and truthfully, I'll be honest with you, the less the better. So even 10% or less. And it might feel like, well, Lindsay, if they're giving me these limits, why do I have to be so focused on only using 30% of it? It's not about the usage necessarily. It's about what updates monthly on your credit report. Let me break it down. Let's say that we have a credit card and that's $1,000 limit. 30% of that is $300. Okay. So that means every single month when your credit report updates, because you have two different dates on your statement period. I don't know if you all know that, but you have your due date and your statement period date. There are two different dates, and there are usually a few different days in between. Your due date is going to be first. Your statement period date is going to be after that time period. Okay, so you want to, everybody, if you have credit cards, a part of your growth work tonight, I want you to pull up those statements so that you can identify those two dates, because those are going to be very important to you. Okay, you have that due date. Let's say that of that $1,000, we spent $500. So we have a $500 balance on our due date. And let's just say the due date is the 2nd. Okay. On the 2nd, you say, I'm going to pay it down to $300 to that 30%. Okay. But your statement period due date might not be until like the 6th. So that means there are 4 days in between that you have to watch, right? And you want to find your own numbers for accuracy. I'm just giving you an example. Let's say on the 4th, we go to the grocery store. We spend $200. Now that balance is back up to $500, but in your head, oh, I already paid $200 on it before, so me now having a $500 balance is not going to matter. It does. Because on the 6th, when that statement period closes, that balance that's going to update is what? $500. Although you made a $200 payment on the due date, You spent money in between that time period. And that new balance in that between that time period is now what's going to report on your credit report that you're going to see updated that month. Ms. Postel.
That was actually about to be my question. I was going to ask if the reporting date is the same as the statement date, because I remember tracking mine for a while when I was trying to get something, and I would do exactly that. I would pay down the card that I knew was going to report, so to get those numbers down to where I needed it to be.
That's exactly right. That's exactly.
Mhm.
And the thing is that once you have all of your dates locked down, create a spreadsheet so that you know
Mhm.
them, you can kind of manipulate the system a little bit, right? But you just have to know those dates, because let's just say, right, that $1,000, we had a $500 balance on the due date, we paid down $200 and we left it at $300 at that 30%. And let's say we don't touch that card until the 7th, but on the 6th, that 300 reported, we're at that 30% mark, right? So on the 6th, you didn't spend nothing. $300 reported. On the 7th, then you go grocery shopping. That balance might go up to $500, $600, or even $700, right? But those balances are not reporting. It's that $300 that's going to sit with you for that next month until your next statement period comes. Now you want to program yourself that for that next month, before the 6th, you want to make sure that you drop that balance again. Always still making a payment for your due date, but you want to use that time in between to not spend any extra money and to pay down even more money. Some of my credit cards, right, my due date and my statement period date fluctuate between before and after my pay dates, right? So what I will do, and just a general rule of thumb, because once we get the payment history, right, we know that making payments on time is ultra important. You do not want to have any late payments. And when they start showing up late is after 30 days. 30-day late, 60-day late, 90-day late, okay? What I will do is for all of the accounts, especially for revolving accounts, I set them up on auto pay if you can for the minimum amount. Your minimum amount might be $25, $75, just depending on your balance. And then what you'll do is, because every time that bank takes that money, you're going to receive an email to say, hey, we've received your payment for your minimum amount, whatever. Let that be your alert that if you have any extra money that comes in between your due date and your statement period due date, you want to pay any extra that you can, so that by the reporting date, the balance is even less. So using that same example, we have the same $1,000 card. On our due date, we have a $300 balance, right? Taking us to 30%. Let's just say on the 4th, we get paid. Now, Lindsay, I can make an extra $200 payment on that credit card. So now on the 4th, I've dropped my balance down to $100. When it updates on the 6th, guess what? Now it's updating at $100, which means it's updating at only 10% of the utilization for that card. So you want to make a note, write it down, go through every last credit card that you have, document your due dates, and document your statement period dates, which is the end date on your statement. You'll see on your report, it will say, statement account from, maybe September 2nd to October 2nd, right? That lets you know that around the 2nd of every single month, that's when it's going to close, and that's going to be the closing balance that actually updates on your credit report. Now, it may fluctuate, right, based on a month that have 31 days or 28 days, right? So you want to look at it every single month, and usually with your credit card company, it'll let you know that your statement period ends on this date. That is important, super important, okay? Now, I'm not saying this for y'all to go and do it, okay? But I have seen people leverage their credit cards to shuffle some things as they have tried to restore their credit. Let's just say you have a card that has an earlier statement period ending date might be on that 2nd, or let's just say on the 6th. You might have one that updates not until let's just say the 15th. I have seen people use their credit cards to have one pay off this one so that by the end of that statement period date, it has a zero balance. And then after it reports at zero balance, they take that credit card and then pay off this one, right? And wipe it. So by the 15th, now this one has a zero balance. And really, they're just shuffling their balances. Now, I'm not saying go and do this and just start, getting crazy with it. But it's important to have the knowledge so that you can leverage it whenever you need to, right? It is a tool, it is a strategy for you. I just realized that I was not sharing my screen. So please forgive me. I'm looking at it, but y'all are not. Okay, here we go. All the things. So you want to make sure that you understand those dates so that you can really strategize around your payments. That is super, super, super important. Any questions about that so far? I saw a couple of things going on in the chat and I don't want to miss anybody. You tell your baby credit shapes your future. Absolutely, it sure does. Is it better to pay more on your credit cards? Yes, it is. Really great question, Mr. John. You absolutely want to pay more than your minimum payment, okay? Like, I'm gonna just go ahead and tell you that flat out, because one thing about credit cards is that we have compounding interest, okay? That means that compounding interest, you're being charged interest every single month on the balance that you leave on those accounts. So let's just say I have a $1,000 credit card. Let's just say my balance when it reports is $500. If it reports at that $500, you're going to be charged interest based on that $500 balance that you left. Let's just say that your minimum payment was $25 and you only paid $25, which brought you to $475. You're going to be charged interest, and sometimes that interest will add right back over that $475 that you had. So now that next month, that report might be what, $505 with the new interest, even with your payment. So compounding interest adds up, and you want to be so mindful of that. Never just stick with the minimum payment, okay? For payment history purposes, I set up my stuff on auto pay for the minimum, but as soon as I get that email alert, that triggers me to go and make an extra payment. Now, a couple of myths that I want to address, okay? Because we know he say, she say, they say, we say, okay? Checking my credit score, my credit lowers my score. That is false. When you check your score, when you're using all the apps, whatever you use, sometimes it'll show up as a soft inquiry. Soft inquiries do not mess with your score. Only hard inquiries. And hard inquiries are when you're actually applying for credit, okay? Paying off old debt erases it from my reports. That is not factual unless you've got it in writing from that creditor and they said that they would do that. Now you want to ask and you want to advocate for that. So let's just say you have something in collections, right? It's been in collections for 24 months. We've got some money, we want to pay it off. Don't just assume that when you pay it off, it disappears. What will happen is you will pay it off and it will now change from having a balance to being settled and paid. But it'll still show that it was a collection item. Is it helpful for a lender to see that it's been paid off? Yes. But don't just assume that it disappears, okay? Now, when you are negotiating payments on any type of collections, you do want to ask them, hey, if I agree to pay this off, can you all agree to remove this from my report? Ask them. Advocate for yourself. Don't just assume that it's going to happen automatically, though. And I like to tell people, right? If you can, get it in writing. Have them send you an email, a letter, or something to say that you all have agreed for you to pay this amount, this account off, and they have agreed to remove it from your credit report, because they can, sometimes will. It just depends on who you're talking to, right? Depends on how great of a day they're having, depending on policies and procedures within the company. But you at least want to advocate for yourself. Just don't assume that it automatically happens. Ms. Postel.
Can you give any information about, and it may be like another one of those type of myths or whatever, but what about paying, what about, oh, what is it called? Settling. What about settling on an account versus paying it off in totality?
That's a really
How
great.
does that affect you?
Yep, that's a great question. In reality, it's common, right?
Mhm.
Do lenders love to see it? Not really. And we wonder why, right? Because that shows them. And it also just depends on how often we do it, right? If we got multiple collections and we settled on everything all the time, that shows a lender that there is a big chance that they may give you money that they may never recoup in totality. Now, when we're rebuilding and we're trying to improve, sometimes we have to settle, right? Sometimes we do because we might not have it to give them all of the money, or we just may want to be strategic with the inflow that we have. However, it can be one of those things that's a sore spot for lenders. It just depends on how often it happens. We don't want to abuse it, right? And sometimes it is helpful for you, but you just want to think like a lender always. Because if you, like, if I was asking you for money, right, and you looked at my credit report and you saw that I've had, over the last 3 years, I've had 3 different accounts that I had borrowed money from, and none of them got paid back in full. I've given all of them a piece of it. Are you gonna really trust me to give me your money? You might not. That's how lenders look at it. Because at the very end of the day, when it comes to their credit, they want their money back with interest. Mr. Dabney, I saw that you put in the chat, you thought anytime you checked your credit, it was a hard check. That's not. And I'm so glad that you learned that today. Now you can go out there and monitor your credit. I'm looking at my credit often. Me and the Experian app go together real bad. Okay. I'm logging on. I'm seeing how things change from month to month, from statement period to statement period, because every account that you have is going to have their own different reporting dates. So you could have movement within your credit profile several times within a month. Annual credit report is great. I love it, right? And we even have it in the slides. But when you go to annualcreditreport.com, the only thing is that it doesn't show you a score. It just shows you your credit profile, which is good because the elements of your profile is going to make up the score. You just won't see the score from that. So I personally like Experian. The app is free. You can pay and it will show you all 3 of the bureaus, but you don't have to. Another thing, right? Credit repair is only for people in debt. That's not true. I have seen people who don't have a lot of debt, but still need some credit repair. Sometimes it's because of the things that have happened before and we've just never been able to bounce back. The debt might be gone now, but we still have to do the work to get it back in shape. So I want you all to make sure, right? And I want you to think about any other myths or thoughts or things that you've heard that have not been validated, right? Feel free to type them in the chat or, let me know so that we can talk about them here. But I want to make sure that you all are informed. And the biggest thing, the first thing that we need to do, right, is pull the reports. Pull your report. Dig through them. Annualcreditreport.com will give you a free one from each bureau. And why do you want to check all bureaus? Because not all credit accounts report to the same bureaus. MCE might report to one bureau. You might go to ABC Bank and they might report to something different. So you want to make sure that you're reviewing all of them so that you're knowledgeable about all of them and where you stand. You want to also make sure that when you're going through them, you're checking, right, to highlight any errors or outdated accounts, any outdated information, so that we can create a list, right, of action items of things that we want to address when we reach out to these credit bureaus. I want you all to make sure that you're doing this work after this class. Whenever you see inaccuracies, dispute them, dispute them, dispute them. Duplicate accounts, wrong dates, paid items still showing up as open. Dispute them with each bureau. And you want to do it via certified mail. You want to mail stuff so that you also get a receipt of when they received it, because that also starts a clock and when they need to respond. Keep all your correspondence. Even if you talk to them over a phone, you want to make sure that you still have something in writing to validate what they said to you. And just a fun fact, right? As you start pulling your reports and seeing some things, you might see that you might have had a Sprint account and Sprint done sold it to ABC Collections. You want to validate everything. Do not pay anybody anything unless it has been validated. And sometimes, right, when those companies can't validate it, don't need to be up there. Now, one thing I'll say when it comes to disputing things, maybe unpopular, but you want to lead with integrity. Sometimes I see so many people dispute things that they know they did, they know they had, and they just saying they didn't to try to work the system. You want to lead with integrity, because what happens is when they start doing their due diligence and going back through some things, you might see it come off, but you'll probably see it pop right back up there. That's why I'm a fan of doing it. It might be the long way, but sometimes it's the best way. Be intentional about it. Yes, you can go and pay somebody to go and call some people and send some letters for you, but when you're doing it yourself and you're leading with integrity and you're actually disputing things that need to be disputed, and we're not just flat out telling false statements, things usually work out better for you. But as you address those things, as you get rid of some things, you want to focus on the rebuilding, the reestablishing yourself. Listen, it's not going to always feel good, but we got to do it. You want to open a security card if you can. Now, there are not a lot of banks that still offer them, but you can find them. Go online, find a security card. Lindsay, why do I want a security card when I got to give them my money anyway for them to give me a card? Because it's a part of the process. A secured card is a credit card that you can get from a banking institution based off of the amount that you have given them. So let's just say they have a secured card option. Their minimum is $300. You give them $300, they're going to put that money up in escrow. Then they're going to give you in exchange a $300 credit card. And that is for you to prove yourself. That is for you to show them that, hey, I can manage this. And when you take care of it, you give yourself an opportunity for them to convert it from a secured product. You get your money back and they convert it to an unsecured product. But you got to take care of it. And you can't just take care of that card and then everything else going haywire, because when they're reviewing to see if they want to convert it, they're looking at everything. So you can't have this one secured card that's doing well and everything else over here late maxed out. Then that's still going to impact this one over here too. If you can, if you have a family member, a friend, a spouse that you trust, become an authorized user, okay? See if they will add you to their credit account so that you can reap the benefits. Now, just like you reap the benefits of positive history, you also reap the repercussions of negative history. Okay, so you want to make sure that this is somebody that you can have honest conversation with, somebody who's not making late payments, somebody who is not maxing out things on a regular. I've had clients who've had to take themselves off of being an authorized user because the person who gave them the access to the card started overspending and their score started dropping over here because they're attached to it. It's a great thing when it's used well. Okay. You want to try, especially as you're rebuilding, you don't want to get accustomed to making large payments. Large charges and leaving them there. Make small charges, pay them in full monthly as best as you can. Now, when you get good, right, you can start navigating things. Like I have some clients where all of their household bills and expenses go on a credit card and they use the cash that they have set aside for it to pay off the full credit card every month. And they do that to rack up points. and to show that they know how to use the card. I'm a points girly too. Reward me for money that I'm going to spend anyway, please. Right? But you got to take care of it. Also, right, as I mentioned earlier, you want to try to avoid closing old accounts, especially those revolving accounts, because your length of your history matter. And I promise you, your lenders are looking. They are taking note, okay? And as you start making this progress, you want to be able to protect your progress. You're going to be working hard to recover, okay? Protect your progress. Set up automatic payments when you can. I know sometimes we have to have a certain level of consistent income to be able to do that. However, you want to try your very best. If you can, set up your automatic payments so that you don't forget. We all are doing 1,000,001 things. The world is heavy, life be happening, and sometimes we forget. We got human brains. But forgetting can cost you. But a lender don't see that, oh, you just forgot. They just saw you missed a payment. So they might be assuming that it just might be neglect. Or there's a challenge in affordability. Set up your automatic payments when you can. Keep your utilization low. Make sure you're scheduling your regular credit check-ins with yourself. I tell my clients all the time, you want to have recurring money dates, really once a month at least. But if it's new for you and you're just getting started, 90 days, I can survive with it, okay? But again, it's not about perfection. It's about progress, making progress one step at a time. A couple things I do not want you to forget. Don't forget to diversify your accounts. Another fun fact I'm going to give you. Sometimes you want to apply for credit even when you don't need it, right? Not necessarily loans, but if you can get some revolving credit, some credit cards, some personal lines of credit to stack up your credit limit, that's going to help you. Because if you don't have a lot of revolving credit, and let's just say you only have that one credit card for $1,000, that means your 30% limit across the board is still that $300 only. But let's say you got a $1,000 card over here, you got a $5,000 over here, you might have a $10,000 over there. That gives you more room within your credit limit to play with, to do some things with. And a lot of times when you quote unquote don't need it, you're usually probably in the best position. Apply for credit when your credit score is great, when things are well, because you don't know what's going to happen. 5 years ago, right, I lost my job during the pandemic, but I had racked up good credit and some credit limits that were helpful for me, because the higher your credit limits, the more flexibility you have. I had an issue that happened with a property. I used my personal line of credit to take care of it, that I got at some point when I didn't really need it. But I say, you know what? Let me get it just in case. Now the product doesn't even exist with the bank, so we're grandfathered in, right? So I'm glad I got it. But also too, whenever I need it, it's there. Ask for credit limits increases. If you have credit cards that you've had for a while, you've taken care of them, you have a good credit history, you can ask that lender for a credit limit increase. Some people do it once a year. You might not want to do it every year, but you can ask them that. You know you're about to make a big purchase and you know that you're not going to pay the full thing off or even down to 30%. Ask them for a credit limit increase. They're going to review your stuff. Some lenders might want to do a hard inquiry. Some of them, they might not. But you don't want to be afraid to ask. And again, managing all of your accounts well, right? Don't forget that your mindset matters. I need you to release the shame around your past financial mistakes, the things that you didn't know, the things that your family might have told you and they weren't that accurate. And focus on learning and taking control. I want you all to become the CEO of your finances, just like I want you to become excellent CEOs in your business. But I also want you to surround yourself with community and accountability. You can't do it by yourself. So don't think you can. You need a community around you to support you, to hold you accountable. But I also want to make sure that you are affirming yourself through this process. Because one thing, I'm not going to lie to you, okay? It's going to be hard. It can be challenging. It's going to be frustrating, annoying. You're going to have all the questions. Why do I do this? Why do I need this? Why? What? But you got to affirm yourself in the process because you need it, and we got to take care of it. Even if you're just starting over, that's okay. Because faith without works is dead. We got to do it. We got to put the actions in, but you got to affirm yourself. Take care of your mind and your heart in this process. Your finances are personal, and they truly help you set the trajectory of the rest of your life. So you want to make sure that you are affirming yourself, telling yourself that I attract approvals and not rejection. That my credit is improving because I am consistent and intentional. My past money mistakes do not define my future opportunities. In every session, I try to make sure that we're also talking to your mind and your heart, because those are the things that guide everything else that you do. Your actions, your habits, the work is guided by this and this. So you take care of this, you feed this, you nurture it, because you talk to yourself more than anybody else do. When you take care of yourself, then your habits start to follow. And you start to see the difference. We're going to be collaborating and doing some more things, but we're specifically working on a model for reversing the rejection, because I'm pretty sure some of us here, if not all of us, have been rejected at some point for credit. Me too, at some point, right? And I want you all to get comfortable with doing the work to reverse that, because we are claiming approvals in 2026. But I want you to be confident. I want you to be comfortable. Scan the QR code so that you can stay connected with us through our newsletter. But do the work. Commit to yourself to do the work, because you're worth the investment. Stay connected with me. I have all of my contact information here on the screen. I collaborate with MCE often. So whenever you see that my name is up on a webinar, make sure that you're here, and make sure you tell a friend to tell a friend and share it with somebody. Join all of them, right? Whenever you can, because all of our colleagues are amazing, but make sure that you show up, because I want to pour into you. But don't let me work harder for you than you're willing to work for yourself. Thank
That's
you all
right.
for being
Thank
here.
you, Lindsay.
Thank you. I appreciate you always.
Thank you so much for sharing all your knowledge with us. And yeah, it makes me feel good. I know, like everybody else, thank God I have good credit. However, it's a wonder. I've been through cancer twice and a stroke. And let me tell you, it takes a toll on your finances.
Yes, it does.
So yes, my little balances are up there that I gotta bring down too.
Yeah.
But
And we all do. Thank you for sharing that, Lisa, and being vulnerable, because regardless of what positions we are in, regardless of our titles, we go through life too. Right?
that's
There was
right.
a time where mine wasn't amazing either, where I had this over here, this balance was high, but you got to work at it. Again, it's not about perfection, it's about progress.
That's right. That's right. Thank you.
Of
Thank you
course.
guys for joining us, and please join any other classes that we have. You can find them on marylandcapital.org, and reach out to Lindsay and stay in touch with her and her classes. She's on LinkedIn, and you can always find stuff that she's doing on there as well. And anything you have, of course, Lindsay, send to me so I can share it as well if it's something. Most of the time I share your stuff on LinkedIn, but if it's something I can share on Facebook or something like that, send it to me and I will.
Most definitely. Thank you. And thank you both for being here.
Thank you so much.
You're welcome.
All right, you guys have a good night.
And Miss Lisa, I'll send you a PDF of the slides, because Mr. John asked for them. I don't mind doing that, so that they
Okay.
can have them.
Okay, wonderful. I was going to ask you to do that. That's great. Thank
Awesome.
you.
You're welcome. Talk to you soon.
All right, bye-bye.
Bye-bye.